For millions of salaried individuals across India, the annual ritual of filing income tax returns often brings with it a mix of anticipation, anxiety, and deadlines that seem to arrive all too quickly. This year, however, the process comes with a welcome change. The Central Board of Direct Taxes, or CBDT, has officially extended the deadline for filing income tax returns for the financial year 2024 to 25, corresponding to assessment year 2025 to 26. Instead of the traditional cutoff date of July 31st, 2025, taxpayers in non-audit cases, including most salaried employees, now have until September 15th, 2025 to complete their filings. This extension is not merely a procedural adjustment. It is a response to significant developments and practical challenges faced by taxpayers this year. At the heart of this decision lies a substantial overhaul of the ITR forms themselves. The forms have been revised to simplify compliance and enhance transparency, but these revisions have also required extra time for the Income Tax Department to update its e-filing portal. System development, integration, and thorough testing of the new utilities became necessary, delaying the availability of updated forms for public use. For the average salaried employee, these technical upgrades meant that the tools needed to accurately report income, deductions, and tax credits were not available as early as usual. Many encountered delays in the reflection of tax deducted at source, or TDS, information in crucial documents like Form 26AS and the Annual Information Statement, commonly known as AIS. Since these records are vital to ensure the correct reporting of income and taxes be already paid, any lag in their update can lead to errors, mismatches, and, potentially, unnecessary scrutiny from the tax authorities. Recognizing these practical hurdles, the CBDT's extension provides much-needed relief. Salaried taxpayers now have an additional 6 weeks to reconcile their income details, cross-check TDS credits, and ensure that their returns are accurate and complete. This extra time is particularly helpful for those who might have multiple sources of income or complex deductions, as well as for non-resident Indians and individuals with foreign assets. However, it is important to note that while the return filing deadline has shifted, the deadline for the payment of any self-assessment tax due remains unchanged. If you owe taxes beyond what has already been deducted or paid in advance, you must settle your dues by July 31st, 2025. Failing to do so will attract penal interest under Section 234A of the Income Tax Act. This means that even with the extended window to file your return, delaying the payment of outstanding tax will result in additional costs. Tax experts, therefore, strongly advise taxpayers to calculate their tax liability as early as possible and make any required payments promptly. Interestingly, the extended deadline brings an unexpected financial benefit for those expecting a tax refund. As per Section 244A of the Income Tax Act, if the government owes you a refund, interest on the refundable amount is calculated from April 1st of the assessment year, regardless of when you actually file your return. With the deadline now pushed to September 15th, taxpayers could receive up to 33% higher interest on their refunds compared to the usual scenario. For instance, a refund processed after a return filed in September will have accumulated 5.5 months' worth of interest, instead of just 4. This is a welcome development for many who rely on timely refunds to manage their finances. However, it is crucial to remember that this interest income is itself taxable. When you file your return, you must report the interest received on your refund as income from other sources and pay tax on it according to your applicable slab rate. Overlooking this requirement can result in notices or adjustments from the tax department in subsequent years. The backdrop to these changes is a broader shift in India's tax landscape. The 2025 Union Budget introduced a series of reforms designed to make tax compliance easier and less burdensome. One of the headline changes was the increase of the basic income tax exemption limit to Rs 12 lakh, offering significant relief to middle-class taxpayers. Alongside this, the government rationalized the provisions for TDS and tax collected at source, or TCS, aiming to minimize confusion and reduce the compliance burden for individuals and businesses alike. These reforms are intended to create a more straightforward and taxpayer-friendly regime, but the transition to new forms and systems inevitably involves temporary hiccups. The extension of the ITR filing deadline is thus both a practical necessity and a gesture of goodwill, giving taxpayers the time they need to adapt to the new processes without the added stress of looming deadlines. For salaried individuals, the way forward is clear. Begin by checking your Form 26AS and AIS for any discrepancies or missing TDS entries. These forms reflect the taxes already deducted from your salary and other sources of income. If you notice any errors, reach out to your employer or the deductor to ensure that the necessary corrections are made before you file your return. Next, gather documentation for all eligible deductions, such as investments under Section 80C, health insurance premiums under Section 80D, or home loan interest payments. With the updated e-filing utilities expected to become fully operational in the coming weeks, you should be able to complete your return with greater ease and accuracy. If you anticipate a refund, remember to provide accurate bank account details to facilitate a swift transfer of funds. And most importantly, if you owe any additional tax, make sure to pay it by July 31st to avoid unnecessary interest charges. As India transitions towards a more digital and transparent tax ecosystem, changes like these highlight the government's commitment to balancing the need for compliance with the practical realities faced by taxpayers. For now, the extension to September 15th is a timely opportunity for salaried individuals to file their returns with greater confidence and clarity. Take advantage of the extra time, ensure your details are correct, and approach this year's tax season not with apprehension, but with a sense of preparedness and peace of mind.